Hi all, today we're going to talk about Intel. So you've probably seen the recent news. Intel stock has crashed pretty badly. It's now trading around $19 per share, and I'm sure many of you have thought about, well, if Intel is going to turn around, maybe it's a very good opportunity to buy. Today we're going to discuss that. We're going to discuss Intel as a company, where it's going right now, all of the recent news, the recent earnings results, pretty much do a full analysis of the company, and at the end come to some kind of a conclusion if it's a good turnaround candidate and a good candidate for our investment. If we take a look at the performance of Intel stock, we have to separate two different things. One thing is the recent crash of Intel. We are going to talk about that. But the other one is how Intel performed over the last 10 years. And to be honest, I'm struggling to think about other blue chip company which had underperformed all of its sector by that much. And I'm not talking about like semiconductors. I'm talking about the whole market. If we take a look at this graph shows the performance of SOX, the semiconductor ETF, which by the way, Intel is a part of, against the Intel stock. So over the last 10 years, SOX would have returned you around 650%. Which again includes the recent slump in the semiconductor stock. Intel over the last 10 years would have returned you minus 36%. And this is not really related to the most recent news. This is related to kind of Intel as a business over the last decade. And to understand what has happened with Intel over the last decade, we need to talk about something which investors usually don't talk about. So everyone is focusing on competitive advantage, right? So you have two companies, company A, company B, and people are preferring to buy from company A because whatever. Better technology, better pricing, better packaging, you name it. But what we want to talk about now is the competitive disadvantage. Why don't people buy from actually company B? And the best example of company disadvantage is what had happened to Intel over the last decade. Arguably the biggest disadvantage that Intel has is Foundry business. Just to explain a little bit about semiconductors. So semiconductor business and all of the biggest company that you know of right now can be divided into kind of two sub-businesses. The design of chips, that's what Broadcom, Nvidia, pretty much everyone, AMD, is doing right now, and the manufacturing of the chips. The whole manufacturing thing is done mostly by Taiwan Semiconductors. So all of the companies you know of are outsourcing the manufacturing of the chips to Taiwan Semiconductors and only dealing with the design of these chips. It's not like that with Intel. Intel is trying to both design the chips and to manufacture them. And this is a big problem because AMD, for example, started growing rapidly only after 2009, when it decided to take all of its manufacturing business, which it had, and to spin it off to a separate company which has called Global Foundries, to take all of the money and all of the resource and actually invest this money into design of the chips. Just to explain a little bit about how bad Foundry business in Intel is. So earlier this year, Intel has disclosed a $7 billion loss in 2023 in the Foundry business and reported a cumulative loss of 17 billion from 2021 to 2023, again in the Foundry business. It has also lost $5.3 billion in the Foundry in the first half of this year. So you can understand that the problem is not getting better, it's getting actually worse, and Intel is losing more and more money because of the manufacturing that it has right now. So Intel has plans to do something about all of this situation, but the problem is most of their ideas are related to US government giving them subsidies or kind of paying for this money losing business. For now, it's just a money burner, and as long as Intel keeps it in-house, it will continue losing money there. By the way, I understand that most of the people who are watching this video are probably Intel investors, have some portion of their portfolio in Intel, and probably don't like this video very much by now. Nevertheless, we have tried to present the facts in as neutral way as possible. We don't have any position in Intel. If you find this information valuable or at least interesting for you, please like this video and subscribe to our channel. And meanwhile, other semiconductor companies which we've talked about like Nvidia or AMD actually have enough resources to focus on the chip design, and Taiwan Semiconductors actually have enough resource to kind of focus on manufacturing. So both these groups of companies are focusing on only one thing and doing this one thing really well. We can see that AMD and Nvidia are actually technologically superior to Intel right now. The problem is Taiwan Semiconductors is much superior to Intel's manufacturing. For example, TSMC right now are producing 3 nanometer chips. The smallest chips that Intel can produce are 7 nanometers. So Intel is behind Taiwan Semiconductors in about generation or two in producing these chips. And this is not news for Intel management. Their CEO, Pat Gelsinger, is actually addressed this issue and said that the company is trying to close the technology gap with Taiwan Semiconductors after a decade of underinvestment. This he said, I think, in 2021 before he became CEO once again. But the problem of the company is not only with product design, which is obviously losing, and not only with manufacturing, which again, it's obviously losing. The problem is that the company is kind of behind on all of the trends which were going on in the past decade and actually kind of losing in all of the trends. So we know Intel as a PC chip company, and it was a very successful company, and it decided that it will just continue that way without investment in other technologies. So it lost the whole mobile devices game primarily to Qualcomm. It lost Apple's Macs as a key customer in 2020. Apple decided to go with their own chips, and right now it's on the verge of losing the whole AI trend, which is booming right now. Just think about it. Right now, semiconductors is the hottest sector. Shares of Nvidia and Broadcom and pretty much everyone is just flying, and Intel is crashing 60% over the last half a year. And it's not like Intel is not doing anything. They're not just stopping producing stuff. Just the things which they are doing is not good enough. So they have introduced the Lunar Lake, the AI PC chip, which I'm not sure will make any difference. Their much anticipated Gaudi 3 AI accelerator for data centers is about to come out in Q3. And this is probably the most kind of anticipated chip that the company has produced over a lot of time. The problem is Intel's management are not actually believing that Gaudi 3 will make any significant impact. Although they are saying that this chip is going to rival Nvidia's H100, their guidance for Q3 is actually that the company will see a decline in its revenues by about 8%, so they are guiding for $12.5 to $13.5 billion in Q3, which is a decline comparing to Q3 last year, which was a very weak quarter. So the company itself does not believe that Gaudi 3 will make an impact. All right, now that we've talked about kind of long-term trends and what is going on with Intel right now, let's talk about Q2 results, because all of this mess and hype which is going on with Intel are related to very disappointing and very surprising Q2 results. You would not expect to see such a surprise from such a big company. So in Q2, Intel has reported non-GAAP earnings of 2 cents per share, which was a miss by about 8 cents. So they have reported earnings 5 times less than was expected from the company. Their revenue was $12.83 billion, which again was a miss by about 150 million. In addition to all these things, the company said it would cut 15% of all of its workforce, which is huge, as a part of the $10 billion kind of restructuring project which they have right now. And they said they would cut dividend. And I have a lot of problems with that. Me as an investor, when I'm looking at these surprises, I'm starting to understand that the management doesn't really know what it's doing. And this is my next problem, the credibility of the management. So first of all, Pat Gelsinger guided for certain results in Q2, and we had a huge surprise. So the management of the company did not know what will be the earnings and the revenue of the company in about a quarter. The whole restructuring came again as a huge surprise. It's not like the management talk about problems which they have in the company. This step seems like a reaction to just the bad earnings which they had right now. It's not like they tried to do something over the last couple of years. And we have discussed the problems that Intel have. It's not from this quarter. The problems which they have is over the pretty much past decade. In addition, Pat Gelsinger is known for kind of buying Intel stock, and you can go and look that he actually bought Intel stock when it was much higher than it is today, for $19, which shows you what? That he does not understand where the company is going and that it's going to actually go down because of all of this performance. All of this do not kind of add to the management's credibility. Right now, when I will look at the management guidance for next quarter or next year, I will be extremely skeptical and suspicious about what we're talking about, because they did not know what is going to happen in Q2. So we have talked about Intel's problems over the last decade. We have talked about Q2 results. Now let's talk about the stock itself and which catalyst do we see for the stock. They're not really good. So I've tried to identify which things can move Intel stock by a lot, and here's my list. First of all, Intel will probably have a brain drain right now. It's the situation where you lay off a huge chunk of your workforce, and usually you try to lay off people which you think are not contributing as much as other key employees in the company. The problem is, when this happens, the morale in the company is so low that actually key employees are starting to move to other companies as well. The second thing, we are right now on the verge of tax loss selling season. So this is the season at the end of the year where people are selling their losing position just to claim the tax loss benefit. This season begins around the middle of October and goes through November and December. Intel, being 50-60% down over the year, is the prime candidate for everyone to start dumping its stock. The other thing is the window dressing. So think about that. If you're a fund manager, if you're a portfolio manager, by the end of the year, you will have to disclose which position you have right now. I don't think many fund managers would like to disclose that they own shares of Intel, which has dropped 60%. So I think many of them will do some kind of window dressing and will sell the stock until the end of the year. Another thing is all of these funds and all of these investors who are investing because of the dividends. So if you are investing for the dividends, there are a couple of things you are considering when you're buying a certain company. One, of course, is how much they are paying out. The other thing is sustainability of the dividend. How much the company is paying and for how long without kind of breaking the dividend paying cycle. Intel has broken its cycle. So many people who are investing because of the dividends will dump its stock because it's not a dividend paying stock anymore. Actually, probably all of news which I have for Intel stocks are bad. In addition, by the way, if you go and take a look at their balance sheet, you will see that they have a huge amount of cash, which is nice. You might think, okay, Intel can go and buy something, invest in something, and actually turn around its business. But not really, because for $29.3 billion in cash, which they have right now, they have $53 billion in debt, which can backfire badly if we go into recession. And I'm not sure Intel's management is addressing this issue right now. By the way, maybe the biggest problem which I have with the company and why I'm not investing with it is that management is addressing financial issues. Again, let's recap this. They have cut the dividends, they have laid off their workforce. None of these things are related to technology. None of these things are related to strategy, which is where Intel's problems are. Maybe if we see some plans from the management to actually go and do something about the Foundry business, or to do something with, I don't know, GPUs or mobile chips, or something like that, then we can consider Intel to be a good candidate. Actually, the only positive catalyst for Intel I'm seeing right now is if China keeps threatening Taiwan, and many of the chips manufacturing are right now in Taiwan. Intel is probably the biggest chip manufacturer in the world, which does not have the majority of its business in Taiwan right now. And this is kind of horrible to have this as a positive catalyst for the company, but this is only one I'm seeing for Intel right now. That's all. If you like this video, please like it and subscribe to our channel, and we will see you in the next video. Take care.